And those are the things that allow an appraiser to make not just a credible analysis, but a well-informed, educated analysis when they're measuring risk in the form of value for their clients.
Originating from deep inside the Rocky Mountains, transported through the power of the internet, and arriving inside your tiny earbuds. It's the Appraiser Coach Podcast, helping appraisers increase their efficiency, quality, and make more money. Here's the guy who makes it his life's mission to create value for real estate appraisers nationwide. Your host and the Appraiser Coach, Dustin Harris.
Welcome, everybody. Dustin Harris hanging out in the podcast chair. I want to remind you we are sponsored by Alamode software. Alamode, of course, is the software that I've been using for over 20 years. You should be as well. Go to alamode.com or 800-ALAMODE for more information. DataMaster, of course, is the ability to save 30 to 60 minutes per report. Why? Because they download the data directly into your software. They save you time. They save you money. 30 to 60 minutes per report, folks. Go to datamasterusa.com for more information. One more time. datamasterusa.com. Finally, we are sponsored by Working RE Magazine. Working RE is the ability to be able to keep up on your profession. You need to be keeping up on your profession. What's going on in the appraisal world? You can do it through Working RE Magazine. Go to workingre.com. Sign up for their free email. Again, it's workingre.com for information about the appraisal profession. Well, I have a great guest on, a friend of mine, individual that's been on before. He is an SRA. He is a certified general. He's been in this business 1 year longer than I have. I started in 96. He started in 95. He's still an active appraiser. He is a USPAP instructor. He is an appraiser extraordinaire. His name is Mr. Mike Brunson. Welcome to the program, Mike.
Thank you very much, Dustin. Good to be here.
You know, as I introduced you as an appraiser, but you do a little ministry work on the side, don't you?
Yeah, I do. I'm the chaplain with a nonprofit called Addicted to Hope, and we work with youth who are in juvenile justice facilities, trying to help them understand options and maybe break a chain in their family history.
That is super cool. You know, I have to pause here and just completely off in left field say, you know, I work with a lot of appraisers across the nation, and so many of us are so overworked and have so much time in our business that, number one, we don't have time for our business. We don't take time for our business. And number two, we don't take time for volunteer work. So kudos to you. My hat's off to you. And I think more appraisers ought to pay attention to that and what they can give back to the community. Good for you, Mike.
I always tell, well, thank you, first of all. And I always tell people you should live before you work.
Love it. Love it. Love it.
Shouldn't be your work that defines who you are.
Absolutely. Absolutely. Well, good for you. Well, listen, I wanted to have you on. What I didn't mention is that you are located in the Las Vegas market. Did you start there in 95? Have you always been in Las Vegas?
Yes, I've only appraised residential in the Las Vegas market. I've done some commercial and litigation assignments in other states and jurisdictions, but gotcha. Residential appraisal predominantly here I'll say in Nevada.
Okay, there you go. So the reason I wanted to have you on, Mike, is I wanted to talk about an article that came out back in May that you posted to your LinkedIn account, and I wanted my listeners to just hold the phone here, because when I start to mention about Las Vegas, they might get tuned out. But I think this article and what's going on in Las Vegas has very much to do with everybody across the nation. And basically the title of the article was Las Vegas Homeowners Take a Gamble as Sin City named the most overvalued housing market in America. This is by Samantha Scharf of Forbes staff. It is on Forbes.com back in, I think it was May 14th of 2018 when this was posted. By the way, thanks for sharing the article. It was an interesting read to me, Mike, but I really want to dig in and talk a little bit about this just a little bit. First of all, what are you seeing boots on the ground in Las Vegas right now with values?
Well, so it's a little bit of deja vu all over again.
That's what I was afraid you would say. I was hoping you didn't, but here you go.
But there are some structural differences, some very significant structural differences. Anybody who follows housing markets outside of the one they appraise in, they will probably know that Las Vegas had the highest highs and the lowest lows.
Yep.
We ramped up faster than anybody. If you go to second quarter of '04 and you look at the Case-Shiller numbers, we broke every record since anybody's been tracking data on month-over-month house price appreciation. It was 52.2% in a month. It was ridiculous.
Oh my word! Say that again. Did you? Okay. Okay.
But it was absolutely insane. When you look at the Case-Shiller home price index for MSA Las Vegas, and any of your listeners can do that, it's a roller coaster, literally. Way up until about the third quarter of 2007, and then it plummets. It took Vegas a lot longer to recover from the Great Recession than most other metropolitan areas. But now that it has recovered, the real issue here is it's just simple supply and demand. You don't have to go any farther than that. There's a huge demand for housing in the Southern Nevada market. The economy is good, and there's a dearth of supply. There's a number of reasons for that, but the lack of supply is driving both new and used prices up. And while appraisers need to be cautious, even the article that I referred to said you don't need to steer clear of these markets. And it didn't name just Las Vegas. It said, I think, 17 out of the 400 markets that they track are what they would term as overvalued or overpriced. So it isn't saying stay away. For an appraiser, I think the important thing to know is that if you find yourself in one of the top 5, and I think it was Vegas, San Antonio, Austin, Portland, and Dallas were the top 5. But if you find yourself in any market with rapid appreciation, do your job. And then what I have always done in my firm is we just put a note in there referring to the fact that certain experts recognize Las Vegas is one of the most overpriced, rapidly increasing markets in the nation.
Wow.
And so, as in any rapidly appreciating market, additional caution is warranted when making a lending decision.
And I assume you're doing that for CYA purposes.
Absolutely. Well, not just for CYA purposes, but I really believe that my job as an appraiser is to help the bank, the client, analyze risk.
Yeah.
And while there might be tons of data that supports a contract price or a refinance value, it goes beyond. I think an appraiser has a responsibility beyond just giving them 3 comps and saying this is the value, when you know that there is additional risk associated with your particular market.
Yeah. Okay, good. No, I agree completely. You as a valuation professional, you've been hired to do a job and to state what the facts are. What they do with those, of course, is up to them. I want to back up for one moment and just define, because you've said this word a couple of different times, and I know that the article mentions it. Not only does it mention it, but that's the title. It's in the title. This word overvalued. Okay, overvalued housing market. What do you mean by overvalued? What does that mean to you?
So what drew my attention to this was I thought, here we go again. They're going to bash appraisers.
Right.
But I was very pleased as I read through the article. Their analytics on what causes a market to be overvalued really has nothing to do with the appraised values. What it has to do with is they're looking at your year-over-year change in the top 50 metropolitan statistical areas, and they're looking at 5 metrics, which include nominal income growth, population growth, unemployment rates, change in rental prices, and change in home prices. And when all of those metrics result in a measure that's beyond what and this is Fitch rating services, by the way, when those metrics combine and they result in a percentage index that is above what they expect to see by a certain qualifier, and I didn't see in here that they give us the qualifier, that might be proprietary, but when the index is above what they expect, they call it overvalued.
Okay.
Doesn't mean that appraisers are overvaluing. It just means that the economy is conspiring. I
love it. I love the clarification, because I had the same fear when I read the headline. I thought, okay, here we go again. Point the finger at the appraiser. But I agree. This article was well written. It was statistically based. Let's dig into that just a little bit. You talked about supply and demand. Where are these people coming from, Mike? Is this just California just moving to Nevada?
It's not just California. So Las Vegas, Nevada specifically has a very attractive tax base. We don't have state income tax. We have an economy that's growing now at or above most other Western states.
You have 105-degree weather in July. I've been there, my friend. I'm sorry. I love you, but Vegas I could do without most of the time. It just blows my mind.
I understand. You can escape heat. I don't know that you can escape cold.
Okay, all right, good point. I do live in Idaho even in January, so
I'll take the heat any day. It's a balmy 111 outside right now.
Are you kidding me?
I'm not, but my pool is a wonderful 88 degrees.
That's bath water,
as soon as I'm done with you.
Okay. All right. But that's, wow.
So anyway, we're talking about where's the population coming from.
Yeah. What's causing this influx of people and not enough housing to keep up with it?
Well, some people will be aware that the political and the economic climate in California is what, to be kind, some people would say is not ideal. So we have a lot of people from an adjacent state that are looking for a place to relocate. And, Las Vegas, Southern Nevada, Northern Nevada, we have a great variance in climate types. Northern Nevada is completely different, high mountain range. In Sierras, Southern Nevada, high desert. So you can go anywhere you want, get the same tax benefits. Nevada is still a relatively small state. We only have 3 million people. 74% of that population resides in Southern Nevada. So there's, the gaming concept, the entertainment concept. There's a lot about Southern Nevada that is attractive to people looking to relocate. Yeah. And we're once again the fastest growing metropolitan area in the nation.
I've been down, I go down to Vegas at least every 3 months and actually, a little bit more than that for various conferences in my mastermind group down there. I see a lot of construction going on down there. Yes. I assume that's continuing to at least keep things caught up a little bit, but we're still seeing a huge influx of people and less supply than is needful. But this is not just a Las Vegas problem. We're seeing this, as you pointed out, several other cities. Texas is a big state that people seem to be moving to for various reasons, political or otherwise. But we're seeing a lot of increase in population there as well. My sister happens to live in Fort Worth. I've got appraiser friends in various cities, some of those that you mentioned. What I want to do, Mike, is talk a little bit about what this looks like for the appraiser. What do we as appraisers need to be looking for? But first I want to pause here and remind you that we are sponsored, of course, by 3 great companies. One of them being Alamode Software. Alamode is it's the software I've been using forever and forever and forever. I mentioned earlier that I started in 96. I started with Alamode Software. There's a reason that I've stuck with them. I've used some of the other software. It's good, but it just doesn't have the tools that Alamode has for me. The mobile, number one, is just huge for me. And some of the other tools that I'm able to use inside the program is absolutely amazing. Folks, you need to pick up the phone. Don't just go to their website. You can go to alamode.com. But you can pick up the phone, you can call 800-ALAMODE, and you can talk to a friendly and knowledgeable salesperson who will tell you a little bit about what you're using and a little bit about what you could be using and why they are different. I encourage you to do so if you're using any other software out there. Again, it's alamode.com or 800-ALAMODE. The other ability for me to be able to save a lot of time, and I'm talking a lot of time, every single report, folks, we say 30 to 60 minutes per report. Let's just round it off to 45 minutes. Think about that. Every appraisal report that you do, if you could save 45 minutes, what would you pay for that? I'm telling you, it's an investment, not a cost. It's Datamaster. You can try them by going to datamasterusa.com. Now, they're not in every market. I know they're in Las Vegas. They're in some of these big metro areas. I have 5 MLSs that I use. 2 of them use Datamaster. I wish all 5 did because they are amazing at what they can do. If they are in your area, you need to be using them. Go to datamasterusa.com. One more time, it's datamasterusa.com. And finally, we are sponsored by Working RE Magazine. Just this morning, I got an email from Working RE. I looked at the headline and I said, nah, not interested, moved on. But I'll tell you, 2 or 3 times a week, I'm able to look at those headlines and say, you know what, that is very applicable. I'm very interested. I click on it. It's a short read, typically 200 to 300 words. I can read that in 2 to 3 minutes and be up on top of what's going on in my profession. Hope you're doing the same thing. Go to workingre.com and wait a couple seconds. You'll see a little box pop up. Put your email address in there, and you'll get a couple of emails a week. Some of them you will be interested in, some you won't, but you make that decision based on the headline. I'll tell you, folks, if you want to stay up and in the know as what's going on in the appraisal industry, the appraisal profession, you need to be on workingre.com's email list. One more time, it's workingre, as in workingrealestate.com. All right, folks, we are back. We're talking with Mr. Mike Brunson out of Las Vegas, appraiser extraordinaire. Mike, welcome back to the program. Thanks for joining me today. I really appreciate you taking time.
Yeah, once again, it's always a pleasure.
Thank you. Well, I know you're a busy guy, and I really do. It means the world to me that you take some time out of your schedule to talk to us a little bit about what's going on in Las Vegas and really what's kind of going on across the nation. I want to back up to something you said earlier because I think for a lot of appraisers, we're looking at what's going on, and not just appraisers. I think Americans in general are kind of looking at the economy right now. This is being recorded the first part of July of 2018. It will air several weeks from now, but nonetheless, we're seeing kind of this movement. It's a little bit ominous of what we saw prior to 2008, but you said there's a few things that are a little bit different. Let's talk a little bit about those.
Okay, well, the main difference is we have some structural components of the economy that are a lot different. The availability of financing is better than it was, but not
different.
nearly as rampant as it was in 2004.
Yeah.
The current administration is leaning towards deregulation of the banking industry, so we'll see what happens there. But we don't have that. The interest rates are still low, but the availability of credit for housing is nothing like it was in 2004, 5, and 6, where if we had the fog and mirror loans or the liar loans or, things like that, where, if you could fog a mirror, you'd get a loan for 175% of your, whatever you told us your income was.
Right. Exactly. Told us being the key term.
And lenders would, they'd allow you to buy way more house than traditional qualifying ratios would recommend. And so there were some economists that were talking about the string vest buyers who would show up and the only thing they owned was a string vest, and they were buying $400,000 or $500,000 houses that were twice the median house price in whatever their area was. That's simply not happening in our current environment.
Okay. And I'm not going to ask you to predict whether or not we're in a bubble and whether or not or when it's going to burst. Hopefully, knock on wood, it's not going to happen. And hopefully it is different than it was before. But that being said, there's no doubt that we as appraisers, those of us who lived through 2006, 2007, 2008, 2009, 2010, we're a little bit gun shy. And we look at some of the similar things, though you pointed out they're different, yes, but there's some similar enough things in there that we're a little bit leery of what may be coming. And I think that we should be. I think as appraisers, we should learn from our past and say, maybe we should be covering our backsides a little bit. Let's talk a little bit about that. What should appraisers be doing now, whether they be in Las Vegas, some of these other cities, or just, in Idaho Falls, Idaho? What should we be doing right now to make sure that the reports that we're putting out are credible, they're reliable, they're things that we as appraisers need to cover our backsides on?
Well, so the thing I'd remind you is that you know this, but to all of your listeners, an appraisal is a snapshot in time.
Yeah.
And if all of the economic indicators are up and indicating growth as of your effective date, you protect yourself by making sure that your work file and or just your supporting documents that you keep outside of your work file demonstrate that. Right now, if you wanted me to, I can go back and I can pull housing articles in Southern Nevada that go all the way back to 1998 that describe what the economic conditions were according to the newspapers, according to local and regional experts. So I'd recommend that your listeners, like I've got a folder in my database called economic data, and it's got 50 different subfolders in it, and they're all national local experts. I've got a local guy named Home Builders Research. Mm-hmm. He tracks and trends new homes and resale median prices and prognosticates about what the future holds. I've got his newsletters going back all the way to, I think the oldest one I have right now is 2002, but I've got an archive folder. I think it goes back to 97. Why would I throw that away? Pictures are cheap, and you never know when somebody's going to sue you for something from 10 years ago.
Exactly right.
And it's nice to be able to say, listen,
it's
don't
not
judge
just
me through
right.
today's lens looking backwards.
Right.
Judge me based on what everyone was saying then.
Right.
So let's go to the CBER Economic Index meeting that was held 2 months before my effective date that I attended, or even if you didn't, that I paid for. Mm-hmm. And let's see what everybody was saying then. Right? And it kind of puts things into perspective. So I would hope that the appraisers that are listening to your podcast, well, I know that the appraisers listening to your podcast are kind of in the top 5-10% of
2%, Mike, 2%.
Maybe 2. All right, I'll give you that. Most of them probably have some sort of a data file like this, just economic data for national, regional, local information. But all of that is just, it's an insurance policy. If anybody comes back at you and says, well, you appraised this thing at the top end of the market, why did you do that? Well, like I said in the appraisal, there were only 5 houses in the entire Southern Nevada market that were similar to the subject at that point in time that were available for purchase, and they were listed for more than I appraised this property for as of the effective date.
Yeah, love it. Yeah.
What could I possibly say that it's worth even less? It doesn't make sense.
Right. Absolutely. Yeah. And I love the fact that you pointed out that sometimes, hindsight's 20/20, sure, but you don't have that hindsight. And we as appraisers are not required to be fortune tellers. We're there to read the market.
And if you can get somebody to fix it, man, I'll pay whatever.
All right. Let's talk a little bit about financing. One of the things that we find in these hot markets, Mike, is a lot of times there's bidding wars. There's multiple offers, and he that has the cash wins, right? Yes. People that bring cash to the table often can beat out their fellow bidders. They can pay for it upfront right away. Typically, even with a situation that maybe others have put in an offer that might be even higher than yours, the cash is king and the cash wins because they don't want to deal with the finance thing. In a market like mine, Mike, honestly, financing doesn't play that heavily into things. When I do a side-by-side comparison of similar homes that are purchased by cash versus those that are financed, there's just not a huge difference, if any, that can be proven statistically. In a market like yours, however, and this does not just apply, I want to emphasize this, not just apply to Las Vegas, but many markets, hot markets across the nation, financing does play a role. Talk to us a little bit about that and what appraisers should be aware of there.
So in your market, is there an investment company called OfferPad?
No.
You heard of that?
Never.
See, there's 3 or 4 of them that are doing business in the Western United States right now. So there's OfferPad. There's another one that's called Home Bidder, or I can't remember what it's called.
Okay.
But basically what OfferPad does is this. They say, if you want to list your home, give us your address. We'll do our analytics on it, and we'll make you an offer on the property for cash, less, I think right now it's 6.5%. They say if you were to list this with a realtor and go through regular title, you would pay between 6 and 10% in closing costs.
Sure.
You avoid that whole thing with us because all you have to do is cash our check. So we think your house is worth, let's just pick a random number. They say, we think your house is worth $350,000. We're going to take 6% of that. We're going to write you a check for the 94% of $360,000. You tell us when you move out. You don't have to do any disclosures. You don't have to do any repairs. And whenever you're ready to move, you tell us. Then they come in with their crew, they fix it up, and they list it 3-4 days later at whatever that normal market was. They're guaranteed to make at least the 6% that they held back. But often, because of the convenience factor, people are willing to sell it to them rather than wonder whether they're going to sell a house. And I haven't done a residential appraisal where at least in probably 6 months in Las Vegas, where at least one offer pad flip has not been in the mix of comps.
Is that right?
Yeah, and it's really interesting. And they sell for anywhere from 6 to 12, 15% above their most recent price. And all they are is a flip. The investors have become aware of these companies.
Mm-hmm.
And when we tell an underwriter in the Western states that this was an offer pad flip that sold 3 weeks ago for $325,000 and we're now selling it for $350,000, they don't even bat an eye.
Yeah, they understand.
They understand that it was a catch purchase, a motivated seller, and the current transaction is typical seller.
Yeah, probably closer to market.
Motivation. So
how interesting.
Yeah.
So as an appraiser, what do we need to be aware of, Mike? I mean, you talked about covering our backside. You talked about work file. As a USPAP instructor, I think we always go back to the credibility of the report, right? What are some of the things that appraisers should be doing other than what we've done for years and years and years, and that is 3 or 4 comps, maybe a listing or two, make adjustments, reconciliation, bam, turn it in and move on to the next one. It seems like our job's getting a little more complicated than that.
Yeah, so it isn't, right? So if you go back and you look at past iterations of USPAP, this concept of credibility has always been there. I have an ongoing healthy, I'll call it a debate, but it's almost an argument
Okay.
with a couple of peers about whether or not appraisal is a subjective or an objective profession. Right. And you may have engaged in this conversation with me at some point in the past. You're not one of the people I'm arguing with. But I always say, while there is some subjectivity, we should be an objective, disinterested third party, because even the uniform standard says that credibility requires, or credible assignment results require relevant support by relevant evidence and logic. And that relevant evidence is going to be economic data, not just comps, but also trends of what's going on in a market and in a region. An appraiser should be a real estate economist. We should know what our unemployment rate relative to the nation is and whether it's trending up or down. We should know what our state GDP is and what what the primary industries are for the state and which industries are growing faster, and is the state diversifying or is it stagnating, things like that. And those are the things that allow an appraiser to make not just a credible analysis, but a well-informed, educated analysis when they're measuring risk in the form of value for their clients.
One of the things that I saw, Mike, in 2010, 2011-ish, was a lot of appraisers who were kind of doing the bare minimums. They kind of disappeared. There's a little bit of Darwinism in motion, and the survival of the fittest was that those appraisers who were truly doing their job, even though they were concerned that there was the bottom of the barrel feeders, they were the individuals that were doing for less fees and quicker turn time and on and on and on. Those appraisers in the long run don't last. And so I guess the lesson today is appraisers don't be that guy, right? Or don't be that gal, as the case may be.
Right. I may have talked to you about this in the past, but I took a pause. In 2004, when things were going crazy, by the third quarter of 2004, I had made more money by the third quarter of 2004 than I had made in the 3 previous years combined.
Wow.
But I looked at it, and the clients were getting more and more demanding.
Mm-hmm.
They were flat out saying, tell us you can hit the number. And if you can't, we're going to find someone else. And if you tell us you can and you don't, we'll make sure you don't work in this town ever again.
Yeah.
I was just like, I'm not built for that kind of an environment. And so the money didn't matter. I just pushed pause. I went and opened a contracting business for a couple of years. Then we had the recession. And let me tell you, if I never taste top ramen again in my life, it'll be too
Been there.
But, you do what you have to do. There's nothing wrong with standing back and taking stock of your profession and deciding, hey, I'm going to slow it down for a little bit. That's another way to protect yourself. If the market's going crazy, you pull yourself out of the market for a little while.
Yep.
Whether it's the real estate market or the stock market. You mentioned at one point you didn't want to put me on on the spot for any kind of a prognostication. There's people a lot smarter than me that are saying that the next recession has to be sometime in 2020.
Mm-hmm.
I am cautiously skeptical of that, but I'll tell you what I'm doing as a business owner and as a father and a husband. I'm putting stuff away, hoping that if something goes sideways in 2020, I can weather that storm.
Good for you. So, good for you. Wise advice all the way around. The article is called Las Vegas Homeowners, or Home Buyers rather, Take a Gamble. Has Sin City named the most overvalued housing market in America? It's from Forbes magazine. Mike Brunson from Las Vegas, thank you for joining us. Wise words from a wise man. And I'll tell you, if my listeners were not taking dubious notes on this, they need to go back, hit rewind, and replay the whole thing again, because some good advice from a good man today. Thank you, Mike.
Always my pleasure, Dustin.
I mentioned earlier that we had a couple of mastermind groups down in Las Vegas. I think there is 1 or 2 seats available down there. Again, it's a place you got to travel to, but it's easy to get to from all over the United States. They make it that way on purpose, folks. So if you're interested, reach out to my assistant, Lee. She can be reached at theassistant@theappraisercoach.com. Thank you for joining us today, and thanks again to Mike Brunson, and we'll catch you next time.
You've been listening to the Appraiser Coach podcast with Dustin Harris. If you like what you hear, please give us a 5-star rating and post a short review on iTunes. For more in-depth insider information on how you can make more money as a real estate appraiser, visit theappraisercoach.com and sign up for the All-Star team today. Thanks for joining us. And now, get out there and create some value.
There you are. Okay, I'm going to hang up on the phone here. Hello, sir. Uh-oh. Hold on a second. I can see you but can't hear you.
How about now?
Ah, yes. Much better. How you doing?
I'm great, buddy. I'm used to using a phone call instead of this audio because sometimes you get feedback. But if we're not getting feedback, we're great.
No, it should work fine. I've tested and retested, and this seems to be a pretty good system. So sometimes I get it, and we just have to.
That's a new background. I like that.
Yeah.
Barnwood going on.
Yeah, that's you want to know a dirty little secret?
Is it just a green screen? That's good stuff.
Yeah. Yeah. If I was serious about it today, I would make sure this is pushed the right way so that nobody can see that. But yeah.
Gotcha.
Yeah. The secrets of videotography, I guess.
I hear you.